Development in the banking space, opening the floodgates for the entry of new players in the tightly controlled financial system. The Reserve Bank of India today released a new framework for granting licenses for universal banks on a continuous or on-tap basis. Now, the regulator has placed a set of draft guidelines on its website for granting such licenses and has invited comments to be sent by 30th of June before the final rules are framed. Ritu Singh is right here with all the details. Ritu, what are the big highlights of that fine print?
Well, to begin with, it's good news for the likes of L&T Finance, Edelweiss, Bajaj, Finserv, and many such other NBFCs who tried getting licenses earlier but failed to do so. So now, of course, to start with, the key eligibility criteria is large corporate houses still cannot apply to become a universal bank. They can, however, invest up to 10% in any bank. Any residents of the country, NBFCs having 10 years of a successful track record can apply to become a universal bank. Now, of course, there are other norms, including fit and proper criteria that they will have to fulfill before they can become a bank. Non-operative financial holding company structure, of course, is not mandatory now if there's only one group entity that intends to become a bank. This is one of the key differences from the earlier universal bank licensing guidelines. The initial paid-up capital for a bank, which is mandatory if you want to apply to become a bank, is 500 crores. Thereafter, you have to maintain a minimum of 500 crores for the entire period that you are a bank. The promoter, of course, must hold 40% minimum paid-up equity capital in the bank, and that will be locked in for a period of 5 years. And thereafter, over the next 12 years, the promoter shareholding, say these draft guidelines, will have to be brought down to about 15%. The other important conditions include listing that bank once you get the license within the next 6 years, having 25% of your branches in unbanked areas, and of course, meeting the priority sector guidelines. Of course, a majority of the members on the board must also be independent directors. So these are some of the key highlights. A standing external advisory committee will be set up by the RBI to vet these applications. But remember, these are just draft guidelines. The final guidelines, of course, will come up after the comments are imbibed in. And here's a word in from a veteran banker, Pradeep Chaudhary, on these new framework.
It's good. In fact, it has borrowed largely from the legislation in the enlightened countries like Canada, where the participation of industrial groups holding us has been capped at 10%. So it's good that that idea is being imported, because there is a lot of apprehensions that industrial groups and they could develop an incestuous relationship with the bank and the business. So there has to be a China wall separating the two. And the other things are unexceptionable. So let us see. And I think there would be great proliferation of banks. I think it is now becoming easier to open a bank in India than to open a restaurant.
All right, an important comment coming out on that front.